Hey traders, it's Greg from Trade90X, and I hope everyone is doing well. Today is the 19th of June. I'm recording this. It's a holiday today. Markets resume in the US tomorrow, but we just got back after being away for 3 weeks. In life, you've got to take time for yourself, family, friends, and you got to recharge. It's not always about business. And again, these rechargers allow you to kind of rethink and shape, how you move forward. And for me, these last 3 weeks were just an incredible time to get away and, visualize what the rest of the year is going to look like. How did my first part of the, year go? And I understand it's not possible for everyone to do something like that, but even little getaways for 2 or 3 days or the weekend, you've got to take them and get away. For me, it's always about quality, not quantity. So with that said, let's get back in and let's just hear my voice a little bit off today. Definitely a little bit jet lagged from I was in Asia for 3 weeks, so the time difference and definitely give you some jet lag. But anyway, let's go take a look and let's get back to work and get ready for this week. Let's see where the markets are. We've been away. Let's see what's transpired and what the next move is. So again, I'm always going to start, this is kind of our weekend breakdown. I'm doing it on a Monday, but I'm always going to do it with the same thing. Before you get started, always make sure, excuse me, make sure you have you've spoken with your financial advisor, accountant about risk and capital. Make sure you have at least 6 months of emergency funds before you risk any capital trading. I always feel like it's important to mention that because again, when people are trying to get into this, they need to understand again the same things. And the reason I repeat this is because in order for people to really, master anything, okay, you've got to talk about it, minimally 10, 20, 30 different times before it sinks in. So every day, again, it's always about, do you understand how the market works? That means you've gotten educated. Do you understand what type of trading suits your personality based on time and resources? Do you understand mastering risk and money management? Are you trading with a back-tested plan that gives you a statistical edge? That means you've sim traded a minimum of 50 to 100 trades and you prove that you can execute your plan. You understand how to journal and review. You understand the importance of, pre-market, live market, and post-market routines, the importance of accountability, the importance of participation in a trade group, people that are trading real money, people that have done it, people you can ask questions, and also never focus and worry about what other traders are doing. Focus on your journey. And again, never follow. Take what you learn and create your plan that works for you. So with that said, every morning we're going to look at whether it's the weekend, pre-market, we are going to look at the same data. And what we're trying to accomplish before we start trading is what is the market context? Who has control? Is it obvious? And then where are the decision points in the symbol and time frame that we trade? Okay. That when price gets there, based on our back-tested statistical plan, we're ready to take that trade. And again, we're not guessing, we're not chasing. Price either comes to our decision points and gives us our confirmation it fits our risk, or we pass. Okay. And that's the hardest part about trading is the difference between a professional and amateur. The professional is just, he's put the time in, he has his proven back tested plan. He knows what he's looking for every day. The problem with, people that just don't have the experience, they're all over the place. Their emotions are running wild. They don't have a plan. And again, this takes some time. Now, no one said this has to take 5, 10 years. Okay. This will all depend on you. Okay, how much work you're willing to put in order to master it. Now, everybody's journey is going to be different. I may learn something in a month. It may take you 6 months. That's just the way life is. But I will tell you, with hard work, okay, it needs to become second nature. So with that said, let's go see and break down the information. So we start the process the same every weekend, every pre-market. We're always going to look at the news. Now, remember, today is a holiday for the U.S. market. Tomorrow we have housing starts at 8:30, but the big one again will be Powell. Then coming in here, jobless claims, you got Powell speaking again. So Wednesday through Friday, you got PMI. These are going to be important right here. You got a lot of important information right here that's going to set the tone for the next few weeks and determine whether or not do we get that continuation rally or do we get a pullback? Well, you know what? I'm not here. I never assume. I look at the information, I break it down every day, and then we make our move. So with that said, with news, we don't trade into news. We let the news come out. What we're looking for is hopefully news pushes the price to our decision points. Okay. Now on the weekend also, so we do a breakdown and then I do a second video because we get a lot of people also that like to trade stocks, and look out for that second video where I'll do it after this one. And I'm going to look at how we quickly scan bullish and bearish ideas with an edge. So look out for that video as well. Next, Fear and Greed X. Now, anything I show you here at Trade90X, this is all free. Okay, you don't need to spend money. So anybody's trying to charge you a ton of money for fancy indicators or fancy services, you don't need it. All you need is the right information, where to find it, how to use it, and then how to execute it into the plan. And again, this is what we do at Trade90X is, again, we show you how to break down the information, but more importantly, it's how to build that plan through your back test and then mastering it through your journal and using your routines as we talk about every day. So when I look at Fear and Greed Index, as I always talk about it, where is price? It's always about where is price and what does it mean? Well, when we get to extreme areas, this is where my favorite time usually comes because this is where it gives us the most room potentially for a snapback to the middle. So if we're in extreme fear, if we get chart setups, I'm looking for longs. Now, when we get into extreme greed, I can just us, again, ultimately the chart will tell me, but I can just look at the data and say, okay, time to start tightening up my stops, taking some profits, and start looking for a pullback. Hey, that may never come. All I can tell you is I work off probabilities. So again, the chart ultimately will tell, but just looking at some of the data, this is what potentially it's telling me until we look at the chart. So again, this is not where I want to start opening up longer term positions. Where I want to start longer term positions and where price is somewhere down here. All right, let's go to the stock market momentum right here. So MPI indicator right here. So basically what I'm looking for is with this is how many stocks are above and below their 50. Right here, we see we're at 66%. And what that tells us is that, you know, price is definitely edge to the bulls. Okay. All right, good. And again, as we start getting up, you know, higher into the 70, 80%, that's when I start to have caution. So what this is telling us, potentially we still have some room to go to the upside. All right. FinViz right here, I look at the groups. What I'm looking at here is the 11 sectors. Okay. I'm looking at what's happening over the month, week, and day. And it's clear that the last month and week has basically been, you know, edge to the bulls, and you can see the sectors. Now, if you want to go a step further, go to performance tab. And you can see right here, you don't have to guess. I don't need CNBC. I don't need 20 YouTube sites. This is telling you right here over the last week, month, quarter, where the money has been flowing. And it's obvious right here that you've had technology. It's no, you know, it's again, it's been obvious. And again, you don't need to reinvent the wheel. Learn to go with the market power. Okay. Remember, when I say market power, this is also what you call smart money. Smart money is basically just institution, banks, hedge funds, the people that move the markets. And again, this is basic information. I do the same thing every morning, every weekend. So if you continue to watch, this should be starting to become second nature. This is how you quickly break down the bias of where the market's headed. Regardless of what type of trader, whether you're a position swing or day trader, I want to know this information, okay? Now, next. On Fridays only at 3:30, you have the commitment of trader report. And again, I don't care what symbol you trade. I always start with the S&P. It represents 75% of the market. And what I'm looking for right here, the smart money. What is smart money telling us? Are there some big, inflows, outflows? Well, there's definitely been some big inflows, but look right here. Okay. This is basically telling you that 76% of the market that counts, the market, the people that move markets, 76% right now have a bias to the upside, only 23% to the short side. So what this tells me is, now remember, this is what this tells me is dips can still be bought to the long side. Until I see a personality change with this, in the symbols that you trade, this tells me dips can be bought. This doesn't mean that we can't have short-term pullbacks and make some money, counter trend. It just tells me that the long-term bias, and you need to know that. All right. Next, before we get to the charts, what I also like to look at is stockcharts.com. It gives me this multi-chart view. And when I'm looking at, typically is I like to look at the indices right here, Dow, S&P, NASDAQ. Let me add the Russell. Comma. Let me add the Russell. Here we go. And also here, this will also have gold. It'll have the VIX, the 10-year, and the dollar. So for me, this is kind of the most important thing. I want to really understand what the indices are doing, and then what are the 10-year, the dollar, and the VIX telling us, okay? Well, it's pretty obvious the NASDAQ has been the leader. The Dow is definitely broken out of, this range. S&P is broken out of that range. Now, before I left, we were in that range from 3,800 to 4,200, and now we've broken out. And I'll show you that when we get to the chart. And now we're running, and now we're running. And then even the Russell has broken out. Now, Russell's the only one that has not broken out to the upside. So we'll have to keep an eye on that. Now we see the VIX has been going down. So again, when the VIX is going down, that's a good sign for the markets. Now the 10 years kind of been in a range. The dollar has been kind of here, in this range. We're at the top part moving down. So typically I really like to see the VIX and dollar moving down if we're going to get that bullish market. So right now it definitely has gotten a little bit extended, and I would love to see some kind of pullback, but again, markets can stay irrational. So, but all I can say is based on data, I would definitely, for me, I've been away, but now I'm back. If I had positions on, I'd be taking some, profit and then reevaluating, or just keeping a small piece and then looking for that pullback. But right now, the bulls are in control. All right. Now, one other thing also I like to look at is I like to look at this. This is how many stocks are above and below their 200, the 50, the 20-day, and then of course I have the VIX, and then I have the S&P, the Dow, NASDAQ, and then I have the advanced decline here. And so right now we're sitting at about minus 800, and I like it when this is at the extremes, but look what's happening here. Now, if we go back 20 years, and I usually look at the 50, over the last 20 years, every time we've gotten up into the 70s and 90s, we've had a potential. Doesn't mean it's guaranteed, just a potential from bullish to bearish. And every time over the last 20 years, we've gotten into, near the 0 to 25 range, we've had a high probability of going from bearish to bullish. So I keep an eye on it. And when we have all three of these kind of cooperating, where they're coming into the extremes, well, that can be very powerful. So right now the 20's already hit, 50 and 200 are starting to move up. So I'm going to start keeping an eye, especially if we get into the 50 in here, and then I'll start paying attention. But what it's telling me is, potentially the same way that we had here, how many stocks are above and below their 50, looks like we may have still a little bit more to go. But again, charts will tell all. So basically, we know that the bulls are in control. We're starting to get a little bit, into that extreme area, so we'll start paying attention, to these, information, and we'll go with that. But ultimately, what we're going to do is we're going to look at the chart. So let's go break down the chart, and let's see what we've got on the S&P. and then we can look at a few other symbols and wrap up this video. So I'm always going to look at, regardless of what type of trading, I don't care, for me, if you're a position, swing, or day trader, I always look at the same charts. I look at the monthly, weekly, definitely the monthly and up for the main trend. I will look at sort of the 15-minute up to a weekly for the intermediary trend, and then the 15-minute and below will be kind of my gauge. But what I'm looking for is I just want to understand what's going on, and I also want to understand, are there any zones of interest? So right now you can see that we've broken out right here, from this area, and we're now moving up. So I'm looking at potentially around this 46 to 4,800 area. The monthly is absolutely bullish. The weekly, of course, has broken out, and you'll always hear me talk about ranges. I don't care what time frame, 1 minute to monthly. I'm always looking for ranges. Where was the latest swing high low? We were right here. And then what I do is I take my Fibonacci tool, just go from swing high to low, and I'm always looking at where's the 125, 150, 200% area right here. And these are just areas of potential interest for me, because whenever price breaks a range, my experience is they've gone to range expansions. I look at 125, 150, 200%, and then I'll again, if it breaks there, 225, 250, 300%. And these are just areas that I've noticed in the past, in my experience, that price likes to go. So right now we're up against the 150. So for me, I can just tell you I'd be looking for something like either something like this. I would love to see this where we pull back and then go back up, or I would love to see something like this. We break, minimum 1 or 2 try, what became resistance now becomes support, looking up to the next target. So, and I'll do that whether it's a 1 minute or a weekly chart. So we are definitely, absolutely 100%, bullish. And then I'll bring it down to, a 4-hour again. So remember, monthly is our main trend. Usually a 15-minute to a weekly is going to be our intermediary trend. I will look at, if we have a main trend that's bullish, I'm going to look at my intermediary trends to look for pullbacks, to support, to look for possibilities to enter into that. All right. So if I take the 4-hour chart or an hourly chart, this is where I look. Again, it's all about where is price, where is the price action right here. And I can see now, one of the things that I also would like to do is, well, I want to do this. I'm going to move this back here. I'm going to put in those same levels that I have on the weekly chart. And then these, and again, nice thing about trading views, you can sync any of these. All right, let's go back to the 4-hour. Now, the 4-hour chart is a chart, or the hourly, I like to use for our swing trades. But again, everything is worked off that monthly and weekly. And again, I want to know where those big levels are, because that's where money is controlled. But again, we had that range, we broke out, and we can see I'm always looking for break, retest, rejections. We broke the range, there was a trade, momentum into right here, there was a trade. Here was your last trade, momentum, break, retest right there. And now we're up against the key level. Now, I never want to trade into key support or resistance or supply demand, whatever you want to call it. So now we're here. So again, I need to either see a pullback. So I'd be looking for right here, 1 try, 2 try, up to the next level. Or I want to see a major break, 1 try, 2 try, down, if you want to take a counter trend trade, and then look for these areas for potential support to take trades. That's what I'm looking for. And this is what we do. I don't care if this is Apple, Bitcoin, ES. This is how we break down the charts every day, from monthly, weekly, to our hourly and 4-hour. Now, one of the things that we also do is we also, for people that want to do faster trading, we'll use the 15-minute and below, and we use a process we call the Trade90X previous days range. We use, so the previous days range high, low in black, the midpoints in red, and then I'll use the weekly in purple. I'll use the orange, which is covered right now in monthly high-low. This is the yearly high-low. And then also I'll use the previous day's close and the opening range, which is the first 5 minutes. Now, if you've been watching my videos before, again, we have we call it the 4 context situation strategy. And here are the 4 strategies that I look for. But again, it's always going to come down to what price is telling us, where is price into relationship to the previous day's range, and what does it mean? So, number 1, if price is trending, and I mean trending like this, above, making higher highs, higher lows, or below the previous day's range, making clear, obvious lower highs, lower lows, then we are bullish or bearish, okay? And with that bullish or bearish trend, this is also where I'm looking for potential swing trades. If price is inside the previous day's range, I have no interest in swing trades, because anything that's inside the previous day's range tells us price is neutral. Okay, so the only time I'm interested is if price is above or below, making obvious trend. Okay, and we're looking for pullbacks to support above, pullbacks to resistance below. That's context number 1. Context number 2 is when price is inside the previous day's range, which is kind of doing right now. And ideally, what we're looking for, I'm going to take that off. I'm going to clean this up. What I'm looking for is top third and bottom third price action. And what I'm looking for is, do we have bullish and bearish momentum at the top third or bottom? Right now, we do not. So there would be no trade. But our favorite trades until price proves out above and below are going to be top third, bottom third. And then I'm going to show you context number 3, where we get a fake out breakout, like something like this. I'm going to move this down to a 10-minute. Now, some of our favorite trades, when they're obvious and clear, are going to be fake out breakouts. So if we get, price moves above, can't hold, you get the break, retest, rejection at or below the previous day's range high. I went from bullish now to bearish short. Price comes back below, but more obvious, momentum, break, retest, and long. And right now, let me make this a little bit thicker. Right now, that's not what you had. Okay, what you had here was price came down and then just kind of went sideways. So context 1 again is when price above or below with obvious trend. Context number 2 is when we're in the bottom third or top third. But again, I want to see stuff like this. And up, bottom, okay, double bottom, double top, or maybe a triple top or triple bottom. And then the fake out breakout, which I showed you something like this. This is beautiful. And you had two chances on this to short intraday on that beautiful setup. Now, what we call this, whenever we get trades, whenever we have price action that's kind of in a range, we can't figure it out, we call this context number 4. This tells us we have no edge, okay? No edge. And when we have no edge, that means we do nothing. We wait for context 1, 2, and 3 to set up, or what we do is we look at another one of our symbols that we may look at, and those are what we trade. The last thing I want to do is trade something that's choppy, has no edge. It either the more obvious it is, like when prices like this, or we get this, the more obvious it is, the higher the probability we're going to make money. Now, one other step that I didn't show you is, now, say you only want to use one chart. So what I would do is here, again, I'll go to my monthly and weekly, and I'll do my breakdown. So what I'll do is, I'm going to go to my monthly. What I'm going to look at is, I'm going to look at areas where price reversed quickly. Okay? That's all I care about. They're just potential areas. I'll go down to my weekly. You can use one chart. Again, these are just decision points. They're just potential areas where price came and reversed quickly. Again, until I get my confirmation, I'm not interested in doing anything. These are just decision points. Now, we'll go through the progression. I'll come down to my 1 hour. Then I'll come back down to my 10-minute. And again, we use this concept of four context strategy for people that they want to keep it a little bit simpler. They want to look at one chart. You're doing the same thing. I'm quickly looking at the main trend, intermediate trend, but then I'm using the tools, the previous day's range, weekly, monthly, yearly, high, low to quickly determine, do I have context 1, 2, 3, and 4 to make a trade assessment based on our back-tested statistical plan, and it's either obvious or not. So now that we've looked at that, and this also tells us this is the beginning, of the week that more, even though there's a holiday today, price did trade a little bit on, Sunday. So when we look at it, we can quickly look and see, here's our high, here's our previous day's range low, here's our midpoint, there's our pivot. Let me get rid of that. Okay. So, and then the bigger lines right here, these are the ones that we found from, going through the weekly and monthly. So I already know, and again, you should always color code or make these thicker so they're the ones from the monthly, weekly, daily charts, and then we know they're important. But when I come in, I can see price definitely had this pump up. We had the continuation and then rejection. Buyers were rejected. Now, again, but today's close, we're just kind of sitting here. So what I would be looking for if the market was open today is I'd be looking for this. If we break with conviction, we get some kind of 1 or 2 try below, lower, high, low, I'd be looking for a potential short-term short, especially down here. Again, this is more intraday trading that we're doing. Or I'd be looking for clarity where, sorry, wrong thing. We get something like this, 1 or 2 try, and then I'm looking back to the midpoint and up. So that's really the 2 trades I'd be looking for today on the S&P. So let's do a few more so you guys start resonating with this. So here, again, here's the weekly. So start with your monthly and weekly. And again, what I'm looking for is quickly, where are there some important decision points where price came and turned quickly, okay? All I want is, these are just, again, potential areas of interest. Okay, go back down to my 15 or 10-minute chart. I've got those bigger areas in. Now, where is price in relationship to the previous day's range? Previous day's high, previous day's range low. Okay, the week started Sunday right here, but now the markets we know are not open. Same thing. The Dow showing us the same thing with the S&P. You had fake out breakout here on Friday. You had the pump up, fake out breakout. Now it's the same thing. What I'd be looking for based on using the previous day's range concept is, if we show obvious lower high, lower low, I'm going to be looking for potential trade down here intraday, or if I get obvious break, retest, rejection, then I'm going to be looking back up to the top of the range and maybe higher. So those are the 2 trades I'll be looking at with the IM, following our 4 context situation strategy, starting off going to the monthly and weekly, quickly determining larger decision points and trends so we can see the trend is up. These were areas where price, again, paused and broke out quickly. And again, these are just potential decision points. Go back to the 10-minute. Again, I got the bigger levels in. Now, where is price? How did the week start? Where is it relative to the previous day's range? Is it above or below or inside? There's the weekly right here. It looks like all the indices did the same. They had the pump up, and then we had the fake out breakout. And then now we're in the same situation. So again, if the markets were open, I'd be looking at that same situation right here, down, or we're in this range. I'd be looking for, again, 1 try, 2 try above the range, and then looking up. And until I got that, I would not do anything. Okay, let's go look at the Russell. I'll go look at a few more. Again, hopefully you're starting to understand this. Again, we've been going through this now for weeks, but again, this is what I do every time we break down, whether it's the weekend. And again, these are just potential decision points where price paused and reversed quickly. Go back to that 10-minute. And again, there was the week right there. And not as pronounced as the other indices, but you still had that pump up and you still had fake out breakouts. And you can see by that wick, that was a beautiful short. And this one is basically not as bad as the other three. It's a little bit more obvious. You had a nice rejection. Now, again, our favorite trades are always going to be top third, bottom third, fake out breakouts, or if we prove above and below. Now, if in your plan you've back tested the middle part, remember, middle is always going to be the most unpredictable and less choppy, but if you back tested it and have had success, and again, I don't mind this trade at all. You had strong momentum and then one or two try back up to the open range, as long as you have 2 to 1. So again, we're always looking for minimum of 2 to 1 to the target one. Our risk management is always the same. We never risk more than 1% per trade is what we focus on, or less. And we focus on never risking more than 3% a day. Why? This is going to help preserve capital. Okay, it's all about preservation of capital and taking the risk that's going to keep you in the game and also allow you to make money. All right, so right there. Now, let me show you a few others. Just again, I want to show all symbols. So I don't care what symbol it is. Here is oil. Again, I'm going to look at areas where price came, paused, and quickly kind of rejected. These are on the weekly. Oil is kind of in a range. You see it's been making lower highs, lower lows. It's kind of in a range with more of a bearish bias. Now let's go to the short term. We've got our bigger levels in, and then ask the question, what is price telling us in relationship to the previous day's range? Is price above or below or inside? Well, it's still inside. When price is inside, it's neutral. When price is above, it's telling us it's above, and it's an outside unbalanced day. Inside is a balanced day. But look at what's been happening. So the week started here, and we can see Thursday and Friday, we've been having some bullish momentum. Now, we haven't broke above here, but we can see we've had some bullish momentum pullback, and I would have no problem, as long as that's 2 to 1, if you took a trade in the middle here up to the top because of the price action here. Now, what would we be doing here? I'd be waiting for the following. Number one, if we break out above, 1 or 2 try, we went from a neutral day to outside trend day, we'd be looking for longs, or I'm going to be looking for double top, potential for a short, fake out breakout, up, break, retest, rejection, down. So those would be the trades. Again, I don't take the trades unless we get confirmation, but everything is planned in advance. We're doing our homework. I don't care what symbol you trade. This is why I'm showing you a bunch of symbols. Let me show you just 1 or 2 more. Gold, because I'm trying to show you different asset classes. It doesn't matter to me if it's futures, forex, crypto, or stock. Again, I'm doing the same thing. What is price telling us? Where are these potential decision points where price kind of paused? Well, we have one here, 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 here. It looks like gold is still in this bigger range. Okay, we know that. Let's go down to the 10-minute chart. We've got the bigger levels in these thicker lines. What is price telling us in relationship to the previous day's range? We had this move up. We went sideways. We could not break. We had a fake out breakout day on Friday. Now we couldn't get above the middle. And this, again, if the middle was part of your plan and back tested, I'd have no problem with this short because you had momentum, break, retest down, and now we're below. Okay, so below is telling us in the short term we're bearish. So what would I be looking for? I'd be looking for this. 1, break and retest, rejection short, break of this level, 1 or 2 try down. Or if we get a change of personality back from an outside to an inside day, I want to see 1 or 2 try, then a move back to the middle and top. These are what we do for every symbol. Let me show you Bitcoin, and then we'll wrap this up. And then also what I told you, what I'm going to do after this is I'm going to put together the scanning video for bullish or bearish, how we look at it with an edge. All right, so now, same thing. I don't care what symbol you look at. Go to that monthly and weekly. Determine what's happening. Well, we know this was a bullish trend. We know that this was a parabolic move right here. Okay. And we came back, and basically this is your break and retest just on a bigger level. And again, where are the potential decision points where price paused and came in? Okay. Paused, came up. These are just potential areas. That's all they are. It's, again, they're not there's no holy grail to them. Again, they're just potential decision points that I'm looking at. Right now, we're making higher highs, higher lows. But again, if we can't if we get above here, then I look for a further move up. But if we start breaking down, we could be making a move down there. I don't assume anything until the price shows me. What is price telling us in relationship to the previous day's range? This is all I care about, is what price tells us based on what we're doing. So step number 1, we look at the bigger time frames. We look at where those bigger decision points are. Then we bring it down to whatever chart you want. It could be an hourly, 5 minute, it doesn't matter. You could be a 1-minute chart. Now, I will tell you is I don't trade intraday unless I have at least a 15-minute or 60-minute chart, because I need to see the bigger picture. I do not want to get lost in the forest, but the steps are the same. What is the bigger picture doing? Where are my bigger decision points? And then what is price doing in relationship to the previous day's range? And then do we have context 1, 2, 3, and 4, which I explained. And if you don't understand anything, hit us up at hello@trade90x.com. And again, what did price do the last few days? It had this kind of pump up, sideways, couldn't get back above. And then now we're right here at the middle. It's a neutral day. And we basically have a context 2 and 4. Basically, price is inside the previous day's range, but we have no edge. We're basically here. So what I'd be waiting for is price to get to the bottom third, top third, fake out breakouts, or price proves above and below. And until I get that, I do nothing. Are we clear? So the nice thing about the Trade90X 4 context situation strategy is it gives you clear black and white strategy. You don't do anything until price gets to a certain area. Again, the previous day's range, the weekly, monthly, yearly high is predictive, not lagging. It tells you a story. Is price bullish, bearish, or is it neutral or fake out breakout? And when price gets to those areas and we get the confirmation, then we take the trade because we've back tested it and we understand our risk. We follow, and the journal then is to make sure we followed our rules. Are we clear? So with that said, let's go back and recap. So again, what did we do? We looked at the news. We looked at the fear and greed. We looked at how many stocks are above and below their 50. It's bullish. We've looked at the sectors. We know that we're bullish, and we know which sectors are leading. We understand the long term is definitely up, but we've also talked about that we've been running a little bit hot. And you can see, we're starting to get up there. Now, we still potentially have some more room, but again, looking at the overall, again, we're starting to come in to some key levels. We could be starting to get, again, we'll do what the chart tells us on the swing trading. If we get the break and retest, we could definitely be moving higher. And in the meantime, we use our 4 context strategy. If we want to keep it simpler, we look at that main trend, we look at our key decision points, we put them on, and then we look and we see what's going on. Now, remember, today is a holiday. Again, coming in, the week started yesterday. And right now, we did end the week with some fake out breakouts. So until we really can get back above this 44.93 area, we could stay neutral. But if we start breaking down, then we could start looking back for a move back down, to these areas right here. Okay. And again, these are just potential pullbacks until we start breaking some bigger levels. These are just, short-term pullbacks in my mind. But again, we're going to do what price, and this is what this four context strategy allows us to do. It allows us to, again, we don't assume, we do what price tells us. We have our rules here, and the tools that we use are predictive, not lagging. They help us quickly determine whether we're bullish, bearish, or neutral, and it allows us, the four trades if we get our confirmation. So if there's anything you didn't understand about, again, how we break down the material every day as far as the data, how we break down the charts from main trend, intermediate trend down to our day trend, and then using our four context situation strategy to do look at it at a one chart view, and then how we can quickly look at that to determine whether or not we have a swing trade, bullish or bearish, or we have neutral trades for our intraday trading. Then hit us up at hello@trade90x.com. I want to make sure everybody understands this information. Okay, with that said, have a profitable start to the week, and we'll be back tomorrow for our pre-market. But also look out for the for the people that trade stocks, look out for our scanning video. Trade safe.